Thank you for attending this quantitative disclosure summary presentation. I am Kawai in JSC's Clearing Planning Department, and I will be leading today's call. Today's meeting will be around 30 minutes, starting with the briefing on the major risk points, and we will try to address as many of your questions as possible within the schedule. In addition, on this webinar, as a special topic for this quarter, we will provide a briefing on potential future margin and parameter changes based on the historical returns following the Bank of Japan Monetary Policy meeting on December 20th, 2022, when a surprise change to the BOJ's yield curve control policy was announced, expanding the range for Japanese government bond yields from 0.25% to 0.5%. All of the meeting attendees will be on mute, but if you have any questions, please let us know using the Webex Q&A function. To begin with, Mr. Miyauchi, JCC's CRO, will give an overview of the quantitative disclosures from the fourth quarter of 2022.
Thank you. JSCC keeps 64 billion yen of skin in the game, which is the same as the previous quarter, mostly from JSCC's own capital, but it also includes contributions from affiliated exchanges. On aggregate, these were equal to 76% of JSCC's shareholder equity. During this quarter, stress test breaches where the risk amount in extreme but plausible market conditions exceeded pre-funded resources were observed on 5 days for precious metal clearing service and 9 days for the energy clearing service. All of the breaches were resolved on the next business day through the daily revision of the default fund. As for margin backtesting, the cover ratio for JGB futures and options fell below 99% this quarter due to the sharp interest rate fluctuations experienced following the BOJ's decision to expand the target range of the 10-year JGB yield in the yield curve control at the monetary policy meeting on December 20, 2022. We'll cover this in more detail later in the webinar. Other than that, all other clearing services were comfortably within our targets, which are 99.5% for IRS and CDS and 99% for other products. There were neither liquidity stress testing breaches nor any participant default during this quarter. JCC experienced no suspension of the clearing services due to the system failure or any other reasons during the past 12 months period. Now I will pass back to Ms. Kawai.
Thank you. Page 7 is an introduction of JCC's service structure. Our clearing services are divided into 13 categories according to the governing regulations and product features, with each maintaining its own default funds. Please note that in this presentation, some data is presented across multiple categories as the resources may be shared. From the product perspective, number 1, cash securities, through number 3, index futures may be called ETP non-commodity, and the subset under this may be called ETP non-commodity derivatives for number 2, JGB or Japanese government bond futures, and number 3, index futures. The products under number 4, precious metal futures, through number 10, sugar futures, may be called ETP commodity. From the exchange perspective, the products under number 2, JGB futures, through number 7, petroleum futures, may be called OSE listed ETP, because these are listed on the Osaka Exchange. From a regulatory perspective, the products under number 1, cash securities, through number 7, petroleum futures, may be called FIEA regulated ETP, because these are governed under the IEA. Under products under number 8, energy futures through number 10, sugar futures may be called CFA regulated ETP because they are governed by the CFA. Page 8 shows financial resources for participant default, called skin in the game or SIG, and contributions from relevant exchanges and PTSs. Most of the exchange contribution is from entities in the same corporate group as JSCC, namely TSE, OSE, and TOCOM. As shown in the left-hand table, JSCC's skin in the game for ETP non-commodity was 20 billion yen, which is shared by all of the relevant clearing categories. And for stress testing, the sufficiency of the financial resources for each category was tested by prorating these shared resources according to the relevant default fund amount for each category. Page 9 shows the ratio of SIG to JCC's capital. The left-hand graph shows the SIG to be used before the Mutualized Default Fund, or DF, and the right-hand graph shows the SIG to be used before the default fund plus alongside default fund of non-defaulting participants on a pro rata basis. SIG before default fund on the left ranges from 19 to 50% of shareholder equity, and SIG before and alongside default fund on the right is from 30 to 100% of shareholder equity. So JSCC contributes relatively large amounts of shareholder equity to SIG compared to other major CCPs, which shows a strong commitment to risk management. Then shows the required default fund, which would be mutualized among non-defaulting participants. The graph on this page shows the ratio of SIG and contributions from exchanges to DF from members. The total DF requirement for all ETP, namely the aggregate of ETP non-commodity in the upper left and ETP commodity, was about 353 billion yen. The ETP non-commodity DF decreased by about 50 billion, but the trend has not significantly changed, and the majority of the DF decrease was attributed to the index future and option OSE. The IRS DF decreased from the beginning of 2022, and it hit a record low in this quarter. This was mainly because the stress loss over initial margin, or SLOIM, decreased as a result of an increase in initial margin, which hit a record high in this quarter. While the stress loss scenarios would not be revised to swiftly reflect the recent market move, the IM requirement increased due to the recent market volatility. Thus, the DF, which is equal to stress losses over IM requirement, decreased. We will touch on this later as part of the review of IM on page 15. The category with the largest DF requirement was ETP non-commodity in the upper left chart, with an amount of about 336 billion yen, which is mostly from ETP index futures options, with an amount of 293 billion yen. On page 11, the data is listed for these graphs, and the amount of potential assessment, or so-called cash call, is also provided. As stated in the footnote, cash call for any ETD is capped at 3 times the default fund requirement, and for OTC products, it is capped at 1 time the default fund requirement. Page 12 shows KCCP. This page is newly added from this quarter, as JCC started applying BCBS 282 or SACCAR to the KCCP calculations for the PFMI quantitative disclosure in December 2022. Page 13 shows the largest value and mean value of the SLOIM. which is the stress risk amount exceeding IM deposited including add-ons. Please note that due to the PFMI quantitative disclosure definitions, the default fund on page 10 is a value at the end of the quarter, but the SLOIM on page 13 is the largest or mean value during the past 12 months period. JSCC's default assumption is cover 2, except for any listed commodity derivatives other than OSE Petroleum, which is the largest one plus the 5 smallest firms in net assets. Among all clearing service categories, OTC JGB had the largest loan, with a peak value of 357 billion yen. Page 14 shows the number of days there was a shortfall in the stress testing of pre-funded resources and the largest shortfall. Breaches were observed on 5 days for precious metals and 9 days for energy. But these breaches were all resolved on the next business day through the daily revision of default fund. Page 15 shows the required and excess IM amounts. The dark blue is the house IM requirements, and dark orange shows clients. Light blue is the excess margin for house accounts, and light orange shows client accounts. The required amount of OSE listed ETP, IRS, and OTC JGB were the largest at between 1 to 1.99 trillion yen. The IM for IRS and OTC JGB has been increasing since the beginning of 2022 due to the more volatile interest rate environment. Looking at the breakdown between house and clients, OSE listed ETP was driven mostly by clients. IRS was evenly split between house and clients, and OTC JGB was mostly house. This trend has remained unchanged for quite a long time. Moreover, the client's excess margin held was quite large in OSE listed ETP and IRS, which has also not changed significantly. The data used for the graph on page 15 is shown on page 16 and 17. Now, page 18 shows the number of breaches in IM backtesting for the past 12 months period. As mentioned earlier, at the Monetary Policy Meeting on December 20, 2022, the Bank of Japan decided to expand the target range of the 10-year JGB yields in the yield curve control. The sharp interest rate fluctuations following this decision resulted in breaches for the ETP JGB, seen in the upper chart. In response, JSCC called intraday initial margin for ETP and implemented ad hoc modifications to the span parameters for 10-year JGB group. No breach occurred in the stress testing of the loss compensation financial resources, and all settlements and collateral deliveries were performed without incident. Due to the sharp interest rate fluctuation explained on the previous slide, page 19 shows JSCC did not meet its target 99% cover ratio for ETP JGB. However, in September 2022, JSCC revised the methodology to set the span price scan range in response to issues into second quarter. Under this revised methodology, the span price scan range increased from 1.29 million yen to 1.77 million yen, following the large market fluctuation on December 20th. We will continue to monitor the market and make additional revision to our margin methodology if necessary. Please note that JSCC sets more conservative standards of 99.5% for CDS and IRS, which were satisfied over the past 12 months. The upper chart shows the large breaches in the past 12 months, which were about 15 billion yen for ETP JGB, 7 billion yen for energy, 55 billion yen for IRS, and 36 billion yen for OTC-JGB. This test only looked at the base IM requirement without add-ons. JSCC has confirmed that these breaches would have been covered by resources such as IM add-ons, excess IM deposit, or SIG, and the whole amount of the default fund would have remained untouched. The lower chart of this page shows the largest breaches in the past 3 months. JSCC started disclosing the figures on qualitative notes sheet of our disclosure in December 2022. The upper chart on page 20 shows the quarterly largest value of variation margin or VM paid to JSCC, and the lower chart shows the largest value of IM code during each quarter. The largest VM for OTC-JGB during fourth quarter 2022 was observed on the business day following the December 20th changes to the BOJ's yield curve control policy. You can see that the VM was much larger than the IM call, except for the IM call for OTC-JGB during second quarter 2022. Due to an emergency intraday IM call that was previously reported. Please note that while VM needs to be deposited and settled in cash, IM may be deposited in cash as well as various securities and other instruments, giving our participants some flexibility for funding. Page 21 and 22 show the composition of collateral used for IM deposit. On page 21, you can see that the majority of ETP IM was cash, as shown in dark blue and dark orange, but some was in JGB and stocks, shown in gray and yellow. Cash collateral was held at either the central bank or at selected commercial banks. The secured cash deposited at commercial banks, in dark orange, was held in settlement accounts of commercial banks, which are fully covered by the Japanese Deposit Insurance Scheme. On page 22, you can see that the majority of OTC IM was deposited in cash, but with some JGBs, deposit of stocks are not allowed for these OTC categories. The entire amount of cash collateral for OTC JGB was held in central bank, and for CDS and IRS, the participants or customers may select their custodian for cash collateral, i.e., Japanese trust account or the central bank account in the name of JSCC. The secured cash deposited at commercial banks in dark orange for CDS and IRS was held in such trust account, which is legally protected from the bankruptcy of JSCC as well as the participant. Page 23 separates cash deposits into those for IM and DF. We are holding a total of about 7.5 trillion yen of cash collateral across all the categories. Next, page 24 shows the custodians for this cash collateral, with almost 100% held in either the central bank account, settlement accounts, covered by deposit insurance, or the trust account. Page 25 covers liquidity risk management. Please note JSCC's liquidity risk appetite is cover 2, but this data is presented based on cover 1, in accordance with the PQD guidance. And while JSCC separately calculates and manages default fund by category for liquidity risk, JSCC calculates and manages it across categories. However, for OTC-JGB, JSCC has established a separate liquidity framework using REPO with clearing participants, because the transaction under this category involve large amount of principal settlement. In the chart, you can see that the liquid financial resources significantly exceed the required amount, and no breaches were reported in the liquidity stress testing. At the time of participant default, at least a half portion of non-cash collateral could be liquidated and applied to the settlement with survivors. However, in this state, non-cash collateral is not deducted either from JSCC's payment obligation or the estimated payment or the actual payment, because to be conservative, we consider that it could be difficult to swiftly liquidate such collateral on the date of default. So we do not regard such collateral as available liquidity resources. Page 26 shows the liquidity resources for the categories other than OTC JGB. The resources reported as cash at the central bank on the first line and secured cash at commercial banks on the third line include cash in the DF related to ETP, where at least 50% of the required DF minus 1 billion yen must be in cash. The unsecured cash on the fourth line shows JSCC's own funds available for use as liquid financial resources following a participant default. The unsecured committed lines of credit on the sixth line shows the committed liquidity available from JSCC's parent company and multiple commercial banks that have been designated as fund settlement banks, and total to more than 1.5 trillion yen. The topic of this quarter is simulations of potential future margin and parameter changes. The Japanese yen interest rate market has evolved significantly since 2021 in response to changing expectations of monetary policy, and the level of the mark-to-market differences and the margins for JGB futures and other Japanese yen interest rate-based products has increased. Given this, JSCC conducted a simulation of the potential level of margin, assuming that the price fluctuations at the March 10th monetary policy meeting would be the same as the price fluctuations resulting from the December 20th monetary policy meeting. We provided the result of the simulations, the contents of which are the same as those on page 28 and page 29, the clearing participant, for them to use as a reference in their house and customer position risk management to anticipate the impact of future interest rate fluctuations. On March 2nd, JSCC also provided the simulation results updated based on price fluctuations up to the end of February 2023. Specifically, to replicate the price fluctuations experienced on December 20th, 2022, we simulated the shift in the margin assuming that the same price fluctuations as those occurring during the period from November 11th, 2022 to January 31st, 2023 would be reoccurred during the simulation period from February 1st to April 19th, 2023. We simulated that the margin for JGB futures would increase by 10% at the time of the March monetary policy meeting, and the largest value of the margin during the simulation period would be 16% higher than at the time of the December monetary policy meeting. Page 29 shows the details of the simulation results. In the chart, the solid orange lines is the actual value, and the dotted orange line is the simulated value. As for the 10-year JGB future, the price scan range is gradually decreasing until March 10th, and then you can see a large increase on March 13th. The largest result of PSR is 16% higher than the actual value from December to January. For the D class of JGB, which is the interest-bearing JGBs with a remaining maturity of 7 to 10 years, the market price fluctuation risk factor gradually increases during the simulation period, and the largest market price fluctuation factor is 18% higher than that from December to January. For the 10-year OIS, base IM gradually decreases until March 10th and then increases on March 13th. The largest result of base IM per notional amount is 3.22%, which is plus 13% higher than that from December to January. As a side note, the March monetary policy meeting was held on March 10th, last Friday, concluding with the decision to maintain the current large-scale monetary easing measures. Although long-term interest rates declined sharply, there was limited impact on the market, as it was seen following the December policy meeting, and margin on the JGB futures did not increase from the previous week, as the change of PSR per notional was from 1.8% to 1.74%.
Thank you. We received some questions in advance. The first one is, are you including the stress scenario of removal of BOJ's yield curve control policy in your margin models? Thank you. Our answer is no. JSCC does not use scenarios which are purely hypothetical and not relevant to any past stress event, such as the one in your question. It can be challenging to develop purely hypothetical scenarios which would be agreeable to all clearing members or clients. But if you have any thoughts, we would appreciate your feedback, and please let us know after this call separately. And second one we have received that is the additional one. We use a slide we shared with participants of this call. Yeah, this slide is actually posted on our website, so you can see this slide from our website. But if you can't find that, please let us know. We will send you separately. Okay. Sorry. Another one is just received is regarding is about the topic of this quarter. Do you have any plan to conduct similar simulations periodically or ahead of expected events? Frankly speaking, we have no specific plan. But as necessary, we may conduct similar forward-looking simulations around once a year and before an anticipated market event that may cause a large margin increase. Okay. Another question we have just received is for OTC-JGB segment, considering high variation margin calls post BOJ action, anticipation that yield curve control might be removed or widened, would JSCC be considering this scenario for OTC-JGB margining? Okay, thank you. We have just answered on that questions. We currently does not use such scenarios which are purely hypothetical ones, but it can be challenging to develop purely hypothetical scenarios. And another one is also related to the OTC-JGB. Have you increased margin on OTC-JGB? Maybe I assume your question is about our actual action on yesterday. Yes, actually, yesterday we made the emergency margin call and unscheduled parameter change at OTC JGB. We have, we have already changed the parameter for the calculation of OTC JGB yesterday. Yeah, this, and I can say this unscheduled parameter change is perfectly based on our rule, which is perfectly rule-based parameter change. Up to now, I cannot see any other questions, but if my answer is not enough, please let us know from the WebEx question button. Well, of course, we are welcome to receive another questions.
Okay. Now, then, I would like to wrap up today's webinar. Please do not hesitate to contact us if you have any additional questions after the call. Just for your information, you can find today's material recording of past webinar, as well as the minutes of past QA sessions at the same page of PQD data on our website. So please visit our website if you're interested. Thank you for your time again. We look forward to posting next webinar and speak to you soon. Thank you.